For Prodigy Finance, we support STEM degrees at top 100 US universities for engineering. And all of these universities we support, we can fund up to 100% of tuition plus living without any collateral or cosigner. And of course, I talk a lot about education loans, different type of loans, and different options that you have. But before I really jump into it, let me first begin with what is a loan and what are the different terms that are important for you. So the assumption I'm making here is a lot of you are waiting for your admits to come out, and you have submitted your applications or you're planning your study abroad in 2020. So you're still not got an admit. You still do not know for certain where you are going to study abroad and how much is your actual cost. But still, I highly recommend that you figure out the loans right now. And once you're armed with this knowledge, it gives you a lot of things. It tells you, can you actually find your degree or not? It tells you, do you actually need support of your family or not? And it also allows you to have literacy, financial literacy about interest rate, fees, and a myriad of different charges, where some loans might be nominally lower, but actually end up being more costly, and vice versa. So it helps you essentially with financial planning, but it also helps you figure out what are the different type of lenders out there. There are lenders who give with low collateral, some give without collateral, some are physical, you have to go to the office, some are again online, some use different currencies. So having all this information right now will help you make a better choice into what is the right loan option for you. So I'll quickly go through the education loan timeline, and basically right now, you guys are on Jan, Feb, you guys have submitted your applications, and you guys are figuring out or waiting for your AGMIC, and while you wait for your AGMIC, you're figuring out your funding ability. So right now, I would say the best thing is to actually approach different lenders and get the loan quotes from them. Understand what different loan lenders are offering to you. And when you approach different lenders, you'll come across a multitude of terms. And right now, I'm happy to explain all of them. And if you have any questions, you can ask them during a Q&A section as well. So number one is collateral. What is collateral? Collateral is basically a security against which loan is given. Traditionally, when you borrow from a bank, the loan agreement is valid only in that country where the bank is from. So if you're borrowing from an Indian bank, the loan agreement is valid only in India. Now, by virtue of you going abroad to study, you are leaving India, and the loan agreement is not valid in, say, US. They have a different jurisdiction, a different law, etc. And if they cannot enforce a loan against you if you're in the US, they need a security back in the home country on the basis of which they lend a loan. Now, this security or collateral can be house, property, FD, but fundamentally, the security is in the hands of the bank and not you. Very often than not, the security or the collateral you are thinking of handing over to the bank is earned through generations of your parents, grandparents, their wealth, which is combined together to build a house, etc. And even if you do have collateral, a lot of Indians don't. And even if you do have a collateral, it's not an easy emotional decision to give it in the hands of someone else. And that's why a lot of students are looking at no collateral options. So there are lots of no collateral options. Traditionally, people will look at your parents or someone to assess a loan. But with Prodigy Finance, all of our loans are without collateral, and we look at what is your potential salary after graduating to assess the loan you can afford. And that kind of segues into the next topic, where I said co-signer, a co-borrower. So if you're taking a loan without collateral, then unless you're like Prodigy Finance, where we assess future income, lenders tend to look at your family or parents to assess loan terms. Fundamentally, more often than not, they look at your father's salary as well as credit score, and the whole loan is a personal loan against your family or co-borrower, which is used for education. Now, this is usually done because MS students are young. They do not have credit history. They have usually not taken loans in the past. So the lenders are not able to assess loans on your ability. But at Prodigy Finance, we know that an MS degree will make you more creditworthy. You do an MS degree, you get 3 years in the US for OPT. Those 3 years with US salary, USD salary, and a frugal living means that a majority of you can pay back your loan in those 3 years to a significant extent and become financially comfortable, which gives us a lot of support. Next up is margin money. Now, margin money is basically if you are taking a loan of 50 lakh and there's a margin money of 10%, which means you will actually only get 45 lakhs from the lender, and you need to pitch up the 5% from yourself. Now, this concept of margin money is extremely important because it means that you do not get the full amount of the loan that you had planned for. So if you had planned to get 50 lakhs, you're actually not getting 50, you're getting 45, and you need to figure out the rest of the 5 lakhs. Now, this is very important to make sure what is the actual amount you're getting in an account. And with Prodigy Finance, we can lend up to the full cost of MS in US. And in case we don't, or you don't want the full amount, we'll just ask for confirmation for the rest. But you know exactly the amount that Prodigy Finance is willing to lend you. There's no uncertainty around that. And next up is grace period. So you're studying. And after you study, you need some time to settle into new life. Before you start studying, you are getting a loan and the whole process. The idea is that till you don't graduate, you don't have a salary. And if you don't have a salary, it is a bit harsh and challenging to repay your payments during your study period. And that is why with Prodigy Finance, we do not have any upfront payments. The first payment you make towards Prodigy Finance is 6 months after the class graduates. So if you took a loan today, and if you started your class in September, 2 years down the line and add another 6 months, you would actually start paying in the Feb 3 years from now. The first payment towards Prodigy Finance would be Feb 3 years from now. We calculate interest simple, that's fair, that's easy to understand, and it is charged only on outstanding principal. So please be very careful when it comes to grace periods. How is the interest charged? Is it charged on the outstanding balance or is it charged on the full amount? Now, if you're going to study abroad, you will have to pay your fee per semester. So in the initial few semesters, you will have a lower outstanding balance. And please check with the lender, is the interest being charged on the lower outstanding balance or on the full amount? Moreover, also check with them if you can repay early or not. With Prodigy Finance, you have freedom and flexibility to repay whenever and wherever you want. Next up is loan confirmation letter. This is also known as a sanction letter, and it's basically a document that confirms that you have an approved education loan. Now, you need the documentation for an approved education loan at multiple places. One of them is I-20. You also need it for visa. You might need it for other purposes. And please use the loan confirmation letter. You might get a pre-sanction letter or a provisional offer. These are also provided by different lenders to give you a sense of what is a loan you can get from them. However, don't use it for official purposes. Always get the loan confirmation letter. Now, what's unique about most of the lenders is they charge a fee for the loan confirmation letter. It can range from who you're talking to, and they might also have other fees, such as they might require insurance, they might require GST, other things. And the total cost is usually 10 to up to actually 2.5 to 3% of the total loan amount. And Prodigy Finance provides a loan confirmation letter for free. So, so technically, Prodigy Finance is relatively low commitment, and a PDF printout of the loan confirmation letter works well. Act I-20, Act Visa, or any other official purposes. Variable interest rate. Now, this is very, very important. Now, the reason why this is important is because all interest rates are variable. The variable rate depends on which lender are you borrowing from. Okay, very, very important, because lenders may not tell you what the variable rate of their interest is. Indian banks use MCLR, marginal cost of lending rate. This is defined by the RBI. The RBI tells how the MCLR is to be used. And interestingly, from April 1st, MCLR is going to be abolished, and RBI is mandating new variable rates that are compulsory for Indian banks to use. So one of them could be repo rate. Repo rate is a rate that RBI defines. If RBI increases that rate, your interest rate goes up. If RBI cuts that rate, your interest rate goes down. The reality is that any interest you take, any interest rate is going to change throughout the duration of a loan. When it comes to NBFCs, they're not governed by the same rules as banks, so they're free to set up their own proprietary rates. Please go to the lender and ask them what their variable rate is. How does the variable rate change over time? What does it mean, and what could potentially the rate mean for you? And for clarity, I want to specify that Prodigy Finance uses LIBOR as the variable rate. It's a globally defined rate. It is updated daily. Every day, Monday to Friday, it's updated through a transparent process. And Prodigy Finance raises funds from its investors on a variable rate on LIBOR, and we pass it on to the customer. So for the customer, a variable rate is a great way to dynamically and efficiently price the value of the money you're borrowing. Next up is fees. Now, this is extremely important, and please do your research, especially because you have the time now. There can be multiple types of fees. You can have a single fee, or you can have multiple fees. You could be informed about those fees upfront, or you could be not really informed and be revealed to you later on. That is, effectively they were hidden. And usually a lot of the fees that are upfront is just, people just tell you the processing fee and the GST, and that fee varies from lender to lender, also on how well you negotiate. However, what they won't reveal are the other fees that you end up paying for your loan. You will pay insurance fee, you will pay fees if you're taking a collateral loan for valuation of property, as well as other subsequent papers. If you're borrowing in INR, you will be paying an FX charge. You will be charged anything from 1 to 3% of your loan that you're transferring from India to US for the if you're borrowing in USD. Sorry, my apologies. If you're borrowing in INR, because you convert the currency from INR to USD and pay for a tuition and living. Now, I do want to highlight that please check with all of the lenders what is the true gamut of fees that you'll be eligible to pay, how much is upfront, and please follow up on any potential hidden charges. One of the reasons I'm very excited to work at Prodigy Finance is we are very transparent and do not have any hidden charges. We do have a single fee, which is higher than our competitors, because it combines all of the hidden charges into one single fee that is 2.5%. So it's slightly high, but we do not have any of the other hidden charges that you may not think of. And if you add up a processing fee of 1%, insurance of 1%, FX conversion of 1 to 3%, if you include the hidden fee, your total fee can go up to 3 to 5% of the total loan. So please always be wary and mindful of that. Next up is loan tenure. So loan tenure basically means the total duration of your repayment. And this is a tenure that starts after a grace period. Now you can get it from multiple ranges and talk about which one, and you can chat with the lender which one is the right one for you. But what we'll honestly say is that at Prodigy Finance, we are a fan of offering long repayment tenures. And if it's a long repayment tenure, it gives you the flexibility to manage your finances in a suitable manner. And by flexibility, if you want to repay a loan early, you can repay a 7-year loan in 1 year and you'll only be charged interest for 1 year. So it doesn't matter if it was a 1-year loan or a 7-year loan, effectively it goes the same. But because we gave you a 7-year loan tenure, you had more comfort towards how you're going to manage your repayments and not be overly burdened with the repayment amount. Then monthly payment, this is very straightforward. This is the EMI. The EMI is paid every month, equal monthly installments. And if you prepay, your EMI in the future reduces. So I won't spend too much time on this. I think most of the people are comfortable with EMI. And the next step is early repayment. So if you repay early, it means you save interest and also you get free of your debt, which can be a big emotional burden for a lot of people. Now, first thing I would recommend is check if there are any prepayment charges. It varies from lender to lender. If you can repay early, great. It makes you less debt burdened. Also check how interest is calculated. If you repay early, is interest calculated on the reduced amount or the actual amount? At Prodigy Finance, we charge interest on the reduced amount. And because the amount is reduced, you are charged less interest and you save money. And lastly, I want to introduce a concept called APR. Now, feel free to ask questions later on if you want. But basically, APR means annual percentage rate, which is a tool to understand hidden cost. So if I were to give you an example, 7%, lot of fees, 7.5%, no fee. How do you compare the two when interest is charged every year while fees is charged only once, that is at the start of the loan? It's not easy to compare. You can't just add, say, 1% of the admin fee to the interest rate to calculate effective interest rate, because the fee is charged once upfront, but interest rate is charged every year. And that's where APR comes in. It basically converts all of your fees, everything, into one single number. And in this case, if 7.5% no fee, that interest rate is effectively the APR. The APR is 7.5%. In the earlier example, 7% and a lot of fee. If the APR is more than 7.5%, you know that you're paying too much on fees, and this is a more expensive loan. If the APR is less than 7.5%, you realize, okay, maybe I'm not paying a lot, and this is a cheaper loan for me. But APR is basically a way for you to compare loan products. If Indian lenders don't provide you, don't worry about it. The secondary reason to follow APR is because by virtue of calculating APR, there are no hidden fees and all policies to charge interest are fair. We are very, very fair at Prodigy Finance in how we charge interest and are very customer friendly and transparent on not having any hidden fees. So yeah, that was a lot, I guess. Before I jump into the next bit, I actually wanted to get your thoughts on what is the most important thing for you in a loan. Is it the fact that you want to have a collateral? Is it the interest rate? Is it the process? You value an easy, simple process? Is it the currency you want to borrow in USD? Is it the actual loan size? You know what? I might get a ridiculously low interest rate, but if the loan size is not enough, can I actually fund my degree? If the total law cost is 40 lakhs, but I'm only getting a 15 lakh loan, can I actually fund that education? Even if the interest rate is, it's it's ridiculously low. So that's something you also think about. So this is a poll that's been very interesting to me. So of course, interest rate is very high, but a lot of you are showing interest in all the other options. So a lot of you are curious on the loan size. A lot of you are curious on the collateral. A lot of you are looking at the process. Okay, is the process good and easy or not? Not a lot of you are looking at cosigners, so that's interesting learning for us. Okay, so I'll take a pause for now, and yeah, let's jump on to the one question I had was, and this is more about just me understanding the audience better. Did you know about Prodigy Finance before this webinar? Okay, so a lot of you had heard about us, but a lot of you did not know us well enough. Okay, and a lot of you actually never heard of us. So I hope you guys know about us and share about Prodigy Finance with your friends. There are so many groups, WhatsApp, Yocket, Facebook. Yeah, feel free to chat about us. And the significant majority of you guys have heard of us,